9:30, so we'll get started. So good morning, everyone. My name is Joanne Creevy. I'm a member of the client services team here at Kenora Finance and Business Services. You're very welcome to our business growth webinar series, Death at ROAS, Are You Spending Too Much on Ads? In today's session, we'll explore why traditional ROAS metrics are becoming outdated and impact the shift has on your marketing strategy. You'll learn advanced methods for assessing profitability and discover how to set strategic profit first marketing goals. We'll also share expert tips to optimize your efforts ahead of the crucial Q4 period, ensuring maximum return on investment and a strong finish to the year. So today's host is Christina McGreevy, our head of sales at Kenora.
Morning, everyone.
And we're thrilled to be joined by our guest speaker, Thomas Gleeson of Store Hero, who will share his expert insights. So if Christina and Thomas, if you want to give a quick introduction to yourselves. Christina, I'll let you go first.
Sure. As Joanne mentioned there, I'm head of sales at Kenora. I've been with the company now for over 4 years, and I've most recently just launched our outsourcing side of the business, which is where we provide business support services to scaling companies that need support with their financial administration, bookkeeping, payroll, and management accounts and cash flow forecasting. So I support clients by having discovery calls with them and matching the appropriate solutions and levels for them. So over to you, Thomas.
Perfect. Thanks very much for having me, guys. My name is Thomas Gleeson. I'm co-founder here at Store Hero. I'm calling in from what looks like Harry Potter's booth under his stairs this afternoon. I'm actually over in London. We were over here yesterday for the e-commerce expo. So that's just to explain where I am. Store Hero is a profit reporting platform for e-commerce brands. So what does that mean? Essentially, we hook into your e-commerce platform, whether it's Shopify, Magento, WooCommerce, or BigCommerce. We're bringing in all of your marketing data, and then maybe differently to some other tools, we're also bringing in a lot of your cost data as well. And really, I suppose what we're seeing is that, a lot of e-commerce brands, many of you listening today, are probably struggling with rising customer acquisition costs and are really, I suppose, struggling to make the right decisions. So by amalgamating all of your e-commerce marketing and finance operations under one roof, we can really show you how to drive incremental profitability above all else.
That's great, Thomas. And just to give a little overview of Kenora, so we are a firm of chartered and certified accountants, as well as company secretarials supporting businesses with their compliance, payroll, secretarial, bookkeeping and tax needs. We are an award-winning practice, most recently recognized by Xero as Partner of the Year for the 4th year in a row, and we're also awarded Practice of the Year and Client Services Award at the 2024 Irish Accountancy Awards. So just to note that the information in today's webinar is for general guidance only. For specific advice related to your business, it's always best to consult with an expert. So we do encourage your participation throughout the session. So feel free to ask questions through the Q&A or chat function, and I will pose these to Thomas. So over to you, Thomas, to begin the session.
Brilliant. It'd be great to everyone to drop a little comment into the chat box there to hear where you're calling in from today. It'd be super before we kind of kick things off. I'll just kick off here, but if anyone can drop any little comments in there, that would be super. But yeah, this is the deck that we're going to run through today. I'm not going to go through 100 different slides. It's the 19th of September this afternoon. We're not a million miles away from peak season as we're coming into the end of the year. It's a difficult time for a lot of e-commerce brands in some respects because the shopping window, a lot of brands are probably looking to do anywhere from 25 to 45% of their entire revenue in Q4. And then even when you pull apart Q4, the lion's share, I suppose, of that revenue is going to happen probably in a condensed 6-week window from the 1st of November to the 10th of December, whatever it's going to be. So, it can be scary coming into this time of the year, pre-peak. Maybe we're not hitting the revenue numbers that we wanted to hit, the profit numbers that we will hit. And it's all about kind of just trying to gear yourself up properly, I suppose, as we're approaching into nearly October and obviously then into peak season in November and December. So that's what we're going to go through today is how to quantify, what that kind of peak season looks like. And, a key determinant and a key question we consistently get from brands is, how do I think about my marketing spend? That's the biggest lever that you have at your disposal as an e-commerce brand. You put more money into the Facebook or Google machine. And while that's fantastic, we don't want to just simply chase revenue numbers all of the time because it might it might harvest a lot of the margin that originally the business was set up for initially as well. So just making sure that we're trying to grow revenue and profit in tandem with each other and in parallel as well. So that's an awful lot of what we're going to go through today. And then I have my nice little title there, Death of ROAS, which we will touch on quite extensively. So a little bit about myself, and it's quite a lived problem. So what I mean by that is, I'm from Ennis in County Clare. My mom has actually had an e-commerce business for almost 20 years at this point. So it's kind of something I grew up with at home. I had a couple of small e-commerce brands myself as a teenager and in my early 20s. The issue I suppose I had at my house was that I was running the Facebook and Google ad accounts for Mam's business for quite a long time. And my dad, like you guys, is an accountant. And, I was often badgering him to say, I need more money to spend. The ROAS is fantastic. He would kind of counter me and say, what is this metric that you're telling me to give you more money to spend on? So as soon as we kind of tried to really dig into it and understand what it was, he was like, you're saying this, but Facebook and Google are trying to claim the same sale. You're not taking that into account. It's not taking any cost into account. It doesn't really mean anything to me. And I originally thought he was a bit of a dinosaur, if I'm going to be completely honest with you. But I suppose the more I got into it, I realized he was actually spot on. So what I actually had to do was build out all these kind of complex spreadsheets to show, all the metrics from Facebook every week, from Google Analytics, email marketing, Shopify, and most importantly, product costs, shipping costs, transaction fees, staff, rent costs, all the bits and bobs that go with running an e-commerce business, to really show him every week as I was spending more that it was actually more profitable for the business and I wasn't simply just driving more top line revenue. He eventually came around to my way of thinking. I think we kind of caught somewhere in the middle, but it definitely led to trying to productize that spreadsheet and just bring that level of insight to e-commerce brands that are all struggling with the very same thing. After that, and I suppose maybe during that period, I did go to work at Shopify. I'm sure many of you listening today are probably operating on the Shopify platform. So essentially, I started there in what was it, probably July, August 2019. Started off in a customer support role, and from there, kind of transitioned after about a year into a consultancy role. So it was a really, really cool role. I kind of went into Shopify, I suppose, personally with the ambition of just soaking up as much e-commerce knowledge as possible and then leaving to set up my own brand. So it was the best place for me to be operating in because you're just speaking to really great entrepreneurs every day of the week all over the world solving different problems. The consultancy role was even a step above that because you're getting to speak to founders, listening to hear how they think about their problems, how they think about planning. Everybody has problems, as rosy as it all looks online. Everybody has problems and things that they're struggling with and looking to improve on all of the time. And that was, for me personally, that was an incredible experience to be able to, work with these guys. My first year in the consultancy role there was working with brands predominantly in the UK between about 5 and 15 million. And then the last year and a half there was kind of in the 25 to 150 million space. So worked with some really, really cool brands. And yeah, just honestly, it was an incredible experience overall.
I bet, Thomas, that really has given you just so much insight, but nothing takes away from that insight that you learned from sitting around that family table and being challenged by your dad. And I suppose it was, as far as I'm aware, it was your mom's business, right? And you stepped in then to support, so that you had one person that was like the passion project, you then that were in supporting her from the marketing point of view, and then your dad as the accountant. So it was really all of you coming from three different points of view that probably led to what we see in Store Hero now today, that you had to be able to talk to her, who was the passion and wanted to launch new products probably all the time and everything, and then finding a way that you were able to report on the finances, but also report to her. So simplifying really that as well. So yeah, I dare say that your time in Spotify was very valuable, or Shopify, sorry, was very valuable. But I would say nothing replaces that insight that you learned early on.
Yeah, and like I think what it probably opened my eyes to was that the problem I thought I had at home, where we had, somebody looking after the passion project and the products and marketing and all that kind of thing. And the fact that marketing was so siloed, I kind of thought that was a problem in our house. And
Right.
that was, very confined to our business at home. But the more business owners I speak to, that's almost how every e-commerce business is actually operated.
Mhm.
Shopify have really lowered the bar in what it takes. Like, I mean, when she would have set up her business 20 years ago, you had to know, it had to be like somewhat fluent in coding. And, it was a massive job to set up an e-commerce business, to get something online and figure out how to, run a checkout. This is pre-Stripe.
Yeah.
Shopify really lowered the bar. Like, if as long as you can really work an iPhone, you can probably set up a Shopify store in a couple of hours and, get a product online. And
Mhm.
while that's, that is fantastic, it has allowed all these massive businesses and really great businesses to prosper and thrive. I think what's kind of become at the behest of that is, I suppose, just one point before I move off that, I suppose that environment, I suppose, of the ability to set up e-commerce businesses quite easily was also coupled with a period where, Facebook ads were really cheap. Like, even if we're talking about the last 5 years as a brief
Absolutely.
timeline here, you know, 2019 pre-COVID, everything was really, really cheap online. Then we came into COVID, and I mean, if you were trying to design the best e-commerce macro conditions in the world, you would say, okay, let's close all the physical stores. Let's only let people buy online. Let's give everyone else loads of money, and let's close, every other angle they can spend money on. E-commerce boomed, like
We're
it boomed. Um, like, obviously you had loads of people come online for the first time, but also with that, and just for anyone listening, Hannah, how it would work and maybe why the ads were so cheap. Essentially, when you look for an ad or you place an ad on Facebook or Google, you're essentially going into this auction and you're bidding for screen time on people's phones, essentially. But, coupled with COVID, everyone's at home, everything is closed, everyone was on their screens all of the time. So you had this unbelievable like environment essentially where physical stores were all closed, everyone's on their phones, everyone had, a lot more money than maybe they have today. Just being honest about it. And, ad costs were on the floor, the consumer had a lot of money, and physical retail was closed. So a lot of retailers, I suppose, came online for the first time and probably, in some senses saw a false reality in terms of what e-commerce was. Like, there was a lot of businesses that we're speaking with that only came on during that time period.
Yeah.
And I'd say they were looking at themselves thinking, why didn't we do this 10 years ago? But it was definitely kind of a spike in over maybe a 2 year period there as well. I've probably gone off the point there a little bit, Christina, but um,
No, you're absolutely making the point though, as well that you're the false reality that presented and that time
yeah,
period presented, we we saw it from some clients as well that just had the right product at just the right time and just launched, maybe just shortly before COVID, and then
yeah,
their sales just skyrocketed. And it was a great opportunity, as you say, for e-commerce brands that they'll probably never see again. Hopefully we'll never be in lockdowns or anything like that again anyway. Um,
absolutely.
but yes, versus the reality of growing one over 20 years ago and how challenging that was, and seeing what your mother would have seen was very small visitor numbers probably from the get-go, and it growing over time and having to rely on that return business, rather than, and even word of mouth promotion, how traditional businesses have to grow, versus now how they can just free and easily market themselves on social media. But the increased cost of that is something that it
Mm.
has just completely skyrocketed over the past few years, there's no doubt.
100%. Um, I think over the last, we're in operation almost 2 years, but we probably interviewed over 500 kind of e-commerce brand owners, leaders, people in the space. And I suppose these are maybe some of their, just to even follow on from your point there, Christina, these are probably some of the main problems that they face, rising customer acquisition costs. They have skyrocketed in the last couple of years. It's almost like an extra tax that's being applied to your business. I mean, if your customer acquisition cost has gone up by 20%, it's like your corporation tax doubling in a certain year. If that happened, there'd be riots in the streets. But unfortunately, it's just a necessary evil. You need Facebook and Google to run the business, and their costs are just consistently going up. And I would say, honestly, that is the biggest problem e-commerce brands are having at the moment is rising customer acquisition costs. And it kind of goes back to, I suppose, the thesis that we're looking to solve at Store Hero is helping brands, factor the role, all of those costs into account, and at least knowing as they're spending more and more with their marketing spend that it is profitable. The second point there is, one I came up against at home, and one I'm sure you guys run into all of the time, is that, you have marketers who are really, really good at their job, and you have finance people who are, obviously fantastic at their job as well. Unfortunately, these people within the e-commerce context often speak extremely different languages, and that makes it really, really hard. Like, I often say to people that, e-commerce maybe 3, 4 years ago, it was all a marketing game. But, as a result of your customer acquisition costs really, really increasing in the last 3, 4 years, it's almost morphed into a numbers game wrapped in a marketing cloak. And that's really what it is. If you know what your unit economics looks like, if you know how profitable you can be, you really shouldn't have like a fixed budget for anything. As long as you're hitting your KPIs and you're incrementally raising profitability, don't be beholden to a fixed budget that you have set in place, because there's a good chance that you could be putting a chokehold on your own growth to a certain extent. And the last one there is, no clear view of profitability and the reasons why or why not. And again, there is a lot of marketing tools out there that will bring in a lot of the e-commerce and the marketing data, but the crucial piece that they're missing in that mix is the costs. And without that level of data, you're making decisions essentially with you're blindfolded making your decisions. Over the last couple of years, e-commerce has probably marketing has probably become the heaviest line of the entire P&L for any e-commerce team.
I dare say.
So, you're making decisions on the biggest line item of the P&L without any clear visibility into if it's profitable or not. It kind of sounds ludicrous, but unfortunately, that's kind of the reality for a lot of e-commerce brands, because they are simply listening to what Meta and Google are saying for reasons I will probably come on to in a couple of minutes there.
Yeah, it's that focus on top line revenue, isn't it, Thomas, that you're really trying to break through, because just growing that doesn't always, as we know, lead to
Mm,
profitability. So yeah, great discussion so far anyway. So
brilliant. Let's jump on to the next one here. Yeah, and so yeah, this is like what's not been taken into the mix, I suppose, in a lot of if you have a lot of brands might be using different marketing platforms, but this is what I kind of almost term as the paper cuts in your e-commerce business. There's so many different little fees that come out. You've obviously got your product cost, that's pretty obvious, but you have like, packing boxes that need to go around the products. Like, we're not going into Boots and buying something off the shelf. It does need to be packaged up and shipped. We have transaction fees. You're probably using Shopify payments or PayPal or whatever it's going to be. They're obviously very real costs that need to be taken into account. Staff costs, you've got obviously your VAT or your taxes that need to be paid. If you're working with a digital marketing agency, most brands we're speaking with probably are. There are real fees that need to be taken into account, along with things like rent, software cost, OpEx, just general operating costs to run your business. Discounts, another little paper cut that definitely comes out, and often when people don't maybe price into the models and the targets that they've set themselves for the year. For instance, if you have a welcome 10 discount on your website when you log on, which a lot of people do, that's 10% that's gone. Now, if you have a free shipping threshold over 50 quid there, and most of your average order values are over that threshold, you're probably on, like, depending on what your average order value is, you could be on a 20% sale all the time without really realizing it. And these little things, while they probably will drive a little bit more revenue, depending on the margin infrastructure of the business, could, suck a lot of the profit out of the business in a time where you're getting it from the other end, unfortunately, where your customer acquisition cost, the cost to acquire these guys, are going up and up and up. And the last one there, from a cost perspective, is the returns. Now, depending on the business that you run, this will not be too much of a problem, or it'll be a huge problem. And just to give you some context, like, we have a couple of, whatever you want to call them, fast fashion brands that, one of them I was speaking with last week. It's kind of a specialized shoe company. They're not really fast fashion, I suppose, but specialized shoe company, and they're kind of for people with wide feet, based over in the States. They have a 50% return rate, because typically people buy two sets of the shoes to make sure that they fit correctly. Because just the type of customer that they have, that, particularly on the first purchase, they're not sure that they're going to work. So that's a huge cost that they need to take into account, because, they have somebody else to fulfill the orders. So they have to pay to ship the order to the customer. The customer, then, they weren't charging for returns, so they have to take that cost back again. Then the 3PL need to, repackage that, put something else out, and then ship it again. They weren't charging for shipping, and it was nearly 30% of their margin that was going to get the actual product that the customer wanted to them. And just little things like that, while they're not that little, they can fly under the radar, and just kind of, if we're not looking at the details on a daily basis, these are all core components that can, just kill the margin of the business as a whole. And there just is so many little bits and pieces of it. The more we're getting into this, we're finding more and more of them, but these are probably some of the main ones that businesses are probably struggling to kind of factor into the marketing mix as a whole.
yeah, Thomas, you're absolutely right. Like, all of those costs, if you're not taking that into account, you'll never really know your profitability. Um, And I suppose that example that you've given is so good for any of these sort of early stage or smaller e-commerce businesses that maybe don't even know where to start
Yeah.
with understanding their profitability, because they may not be using an accounting software, or maybe relying on the Shopify reports and looking at money in the bank and thinking, sure, it's grand, but not taking into account all of these hidden costs, and where they could be maximizing on profitability. So yeah, very insightful
And
so far.
just to point out, like Shopify reports are fantastic, but the problem is with them, like, we're all in, when most people dialing in here today are in Ireland, you're probably using Unpost or DPD.
Mhm.
We don't have the access that the Americans have to plug in Shopify shipping in Ireland.
Right.
So those shipping costs, like what you're seeing is shipping paid by the customer. But if you're giving free shipping to a lot of your customers, that's not your cost.
Yeah.
So you aren't getting that cost in there. Also, if you're working with an external provider to ship your products for you, like a third-party fulfillment center, those costs aren't being taken into account, nor are your returns. There's just so many little bits and pieces here, those little paper cuts that will eat away at your margin consistently, and you can kind of get a false sense of reality of what your cogs look like in Shopify. But there's a lot of extra and additional pieces that need to go into that mix as well.
Yeah, thanks for that. And it's one of the main reasons why we promote using an accounting software, because at least you are more easily at least able to track all of those costs and expenses and run a profit and loss account. But I know that your system goes that step deeper than that again, Thomas, which I think is what's excellent about it. Okay.
I just want to make a clear distinction here in that this is not an accounting platform by any stretch of the imagination. This tool is really geared at, founders of businesses and maybe marketers to gauge profitability in real time and get deeper insights into their customers. With profit in mind everywhere. We're certainly not an accounting system. We've kind of got that question once or twice. We would never want to become an accounting system. It's a
Yeah.
completely different kettle of fish. But just in case anyone is listening, we just want to make that clear distinction as well.
Yeah. Yeah, and I think it's an important distinction. And
Yeah.
I think the function that you provide is so much more in depth and so much more specialized for e-commerce businesses, that that's why I think that any e-commerce business that isn't using you, it would put a shiver through my spine thinking, how are they analyzing it? Because you've built something that is very I suppose, innovative in terms of understanding your actual business performance, and that's what every business owner should be striving towards. There's no doubt in my mind that that's what they should be striving towards. But you don't know what you don't know, really. So, it's helpful to have these sessions and explain why they should be looking at this as well. Yes, and I suppose ROAS is something that we've all heard of, and there's been so many books and everything. Written about it. So excited to hear why you're telling us that we should forget all about it.
Yeah, I mean, if you asked me 5 years ago, I didn't think I'd ever be presenting a slide on with this written on it, because it would have been how I would have evaluated all of my marketing campaigns.
Of course.
It's still how most, just to your point, like how our business is evaluating their marketing. Most of the time, it's for this guy here, your return on ad spend. For anyone not just listening, maybe might not be familiar with what ROAS is. It's you spend €1 on Facebook and you generate €10 on an order on Shopify. If that sale has been attributed to Facebook, Facebook will show you that you've generated €10 for every euro that you spent. So a 10 return on ad spend. There's a lot of problems with that. While it sounds great in theory, there's a lot of problems with that. The first one there is it doesn't factor into account any of your order costs. You're simply saying, you spent one, generated 10, that's fine. Now, if you're getting a 10 return on ad spend, that's a good place to be in anyway. But it doesn't factor into account your product cost, shipping, transaction, fulfillment, return costs. Just take, for instance, two different businesses, business A and business B. Business A has a 70% gross margin after we take out all those variable costs, and business B has a 35% gross margin. Now, if both of those guys are getting a 5 ROAS and we have the person, let's just say we have the same person running both businesses and they say, we're never spending any more unless we go below a 5 ROAS. Well, keeping the spend at a 5 return on ad spend for the business with a 70% gross margin is probably meaning that you're putting a massive cap on not just your revenue, but also your profitability, because you could scale way heavier at a reduced return on ad spend, and just grow the business a hell of a lot more. Whereas if you're a business with a 35% gross margin, maybe you can spend a bit more, but maybe not a hell of a lot more, because you just don't have the margin to kind of do it. But that's just the first problem I would have with it, and most people are using that. Probably leads into the second one there, to be honest with you. A good ROAS is very, very different for everybody. Some businesses need a 4x to break even. Some 30 million businesses we've seen can grow with, can grow and honestly be really, really profitable with two. Just what that means is for every euro, for every €2 that the business generates, they're going to give one back to Facebook, which is a bit nuts. But that's just an interesting anecdote. Facebook and Google have definitely built the best businesses in the world when you kind of see these numbers.
Yeah.
The next one there is a high ROAS can be very, very tough depending on the business. There's a lot of other factors in here. If you are in a competitive space, a lot of people are going to be bidding for the same kind of customers that you have. And again, it just doesn't necessarily align with the financial objectives of the business. Number 4 there is high ROAS can be a missed opportunity. So to that point, if we go back to the business that has a 70% gross margin versus a 30%, the business that has a 70% gross margin, imagine they could spend like 10 times the amount and instead of a 5 return, only get a 3 return. The business will be much, much better and they will be generating infinitely more profit as a result. So just using ROAS as a daily indicator of success, as opposed to simply monitoring your incremental uplifts and profitability, there's a lot of issues with it. There's probably 2 I would actually add here. Not to be completely bashing this, but we have Facebook is obviously and Google are both American companies. One interesting piece that I wasn't aware of for quite a long time. Actually, my dad pointed it out to me. Was that if you spend €1 on Facebook and you generate an order on Shopify for 10, that's actually really in net terms not a 10 ROAS. And what I mean by that is if you spend the euro, if Facebook billed you for that tomorrow morning, you would get €1 for 123 here in Ireland because your VAT is on top of it. Okay. But the €10 that you've generated is fully inclusive of VAT. So you're kind of comparing apples with pears. In net terms, what it really should read is that your ROAS is 1 ex-VAT euro against probably about 8 ex-VAT euros. But they're including the VAT in those figures, and it does definitely overinflate it as well. And the last point I'll kind of finish on there is that just the way ROAS works is that both platforms are trying to claim the same sales. So if you saw a Facebook ad or an ad on Instagram or whatever you're kind of on your phone today, and then tomorrow you click on a Google Shopping ad for the same product, both of those platforms are going to try and claim the same sale. And that makes it really, really difficult. If we're going back to the same point that, brands are spending way more than they ever have on marketing, and you're using these metrics that can be really, gamifiable and unreliable, that makes it really, really hard to make decisions on what is the heaviest line of your entire budget for your e-commerce business. And so there's all those kind of those factors culminate together with, a clear indicator that as customer acquisition costs are scaling and brands are spending more, they need a better, ability to evaluate if that spend is actually profitable for the business.
And Thomas, I suppose to touch on ROAS and to understand why it's such common practice that, I suppose when you think of starting a business and everything, you're told right away, okay, understand your return on advertising spend. The margin piece is probably something that's left almost to accountants to discuss with them. It's not something that business owners are sort of explained or told, well, look, if you're going to start this is what you need to understand in order to understand your profitability. So why is ROAS such common practice?
Yeah, I mean, I would have started like we our own business at home would have grown primarily through SEO. We didn't actually run a paid ad for the first time until probably 2016.
Wow.
It was amazing when I could actually start running ads and see, put one in, got 5 out.
Mm,
This is great. I've never had this kind of visibility before. The
yeah.
ads were so cheap for so long that that was a grand indicator of success for most brands. They could scale really, really heavily. And in retrospect, it's not best business practice because you haven't taken all of this into account. But
Mm.
it was kind of so new for the first time. And there's an old adage, 50% of my marketing works. The problem is I don't know which 50% it is. You could kind of get that level of visibility now, and you were kind of fairly sure that this was the campaign that was working, that was the ad that was working. So for the first time, people kind of had that level of sophistication and visibility that maybe they hadn't previously had. Whereas,
Mm.
it was fine for such a long time. I think it was because it was so new. People didn't think that, and it was so cheap. That's the other part of it as well. I think the fact that it was so cheap for so long, accountants didn't really need to understand how it worked, and the marketers didn't really need to understand how the accountants worked. Because it was so cheap, it just all kind of worked. And the dirty secret of the whole industry was not a lot of businesses truly understood how the two knitted together. I think that's what we're really trying to bring together with the platform in general, is bridging that gap between the marketing team and the finance team to give them a shared language to speak. Not all businesses were like that. There's a famous brand in the UK called Gymshark. Um, Obviously there's been a lot of kind of Shopify case studies done on these guys. They would have clearly understood the unit economics and all of this data down to the finest art, in a time around 2014, 15, 16, when ads were on the floor. That's really where that business grew their brand awareness. They understood this stuff. They had all of their margins in place. They knew exactly how much they should be spending in a time with extremely efficient customer acquisition costs. And they were really just ahead of the curve in that perspective.
Yeah, that's also interesting, Thomas. Yeah, your insight is has no end. So it's I think we could talk about it all day long.
Yeah, I've been doing it a while now at this stage, so thankfully somebody's listening to me. So I suppose, what does this mean if you're running a brand or a digital marketing agency? If you're simply just looking at that every day, you no real clear idea on what your targets should be. You're probably getting pressure from the founder of the business if you're kind of working in the e-commerce business, or even yourself, to keep your ROAS as high as possible. But again, going back to that point, a high ROAS could potentially be a chokehold on the business for not a positive perspective. And again, just going back to that last piece, no shared language between marketing and finance, or just profitability in general. The best businesses today have the marketing team and the finance team consistently speaking about key KPIs. There's one I'm going to come on to probably on the next slide, or the one after that we probably will just dive into in a little bit more detail. But the shared language between both of those parties has never been more important for brands to really understand. The marketing team need to understand the finance objectives of the business, and the finance team, they don't need to become marketers, but they do need to understand what the marketing team are doing and how it necessarily aligns to the finance side of the business as well. I do speak to a lot of businesses who have just extremely rigid budgets, and I often, not all the time, but often the business is capable of so much more, and they're just beholden to a budget that they may have set 12 months ago. Particularly as you're coming into this time of the year, are you ahead of your revenue and your profit targets? If you are, maybe there's an opportunity to really push the boat and not sacrifice any of the above there as well. So just making sure both parties are aligned. Easy to say, harder to execute, but again, that's really what we're trying to achieve with the platform.
Thomas, can I ask a question?
Of course.
If a business isn't performing with their KPIs, how would or what would you recommend for the marketing team to adjust their budget to? Or like, would you say increase or decrease, or what would you recommend?
Yeah, it kind of looks at this slide I'm going to touch on here. You kind of touched on this slide here because, yeah, I kind of said it to you guys, I think, on the last call that we had. There's probably 35% of businesses that we look at that are overspending on their marketing spend. It's not as effective as it needs to be. There's probably 20% that have it spot on. There's a shared language in there. They know what their target should be. They're rising incrementally, and profit is in kind of tandem with that. There is about 40% then as well, that 30-40% that are probably putting a chokehold on their own growth because they don't have the shared language, and they could actually have a much bigger business. Now, if you're in the bottom bracket there that we kind of just touched on there, and if you're spending and you're just not hitting your numbers, the first thing I would say is, what are you measuring every day? What is your true, like, when you log in on a Monday morning, when you're looking at the marketing meeting, like what's the one number everybody is looking at to gauge, are we profitable or not? I'm never in the camp of telling businesses, let's go and spend loads of money on Facebook or Google. What I do want to understand is, like, how efficient are we? What's our margin structure looking like? And as we've dialed up and down marketing spend in the past, not how that has affected revenue. I actually don't really look at revenue that much. I don't care about your ROAS that much. I want to understand, as we've increased or decreased marketing spend, has that resulted in more or less profit for the business? One business I was working with yesterday, we dropped marketing spend last month by 46%, and profit after marketing spend is up by, I think, 30%. Sales are down by 10%, but business owner is much happier. They probably overshot the marketing budget the month before. They, the profitability dropped. Yes, sales have dropped this month, but from last month, but I mean, are you building the business to generate revenue, or are you building the business to generate profitability? That's not a very clear-cut answer for everybody. Businesses are set up for different objectives. They might want to sell in a couple of years. They may want to maximize revenue at certain time periods. They might want to run at break even. Every business we speak to has different motivations and goals, and that's another, I suppose, key piece of the mix here as well, as understanding what type of business that you're trying to run, and what the overall goals are, because that will really, feed into how we make decisions and how aggressive we should be around our spend.
That's great. Thank you, Thomas.
No problem at all. So yeah, I mean, we've kind of touched on ROAS there and maybe some of the issues with it. Yeah, again, this is the opportunity, I suppose. If we know there's enough money to cover left over from every order after cost of goods and marketing spend, everyone is happy. So as we're dialing up marketing spend, are we more or less profitable as a result? Your profit after marketing spend, this is your contribution margin. Now, I don't want to overwhelm anyone with that number. We will dive into it in a little bit more detail. Just what is contribution margin versus, we'll say, net margin, which we're all probably familiar with here today. So contribution margin is your profit after your marketing spend, but before, things like staff costs, rent costs, software costs, whatever it's going to be. So profit after marketing spend minus those operating costs leave you what your net profit is. So contribution margin is really the best indicator of success of your paid marketing spend on a weekly, monthly, yearly basis. And that's really the number that you're trying to maximize within your e-commerce business today. So what is it? It's your net sales. And I want to be very clear on the net piece there. It's not the total sales figure we see on Shopify, because unfortunately that is going to include your VAT. So that's gone. All of your discounts, your refunds, your taxes are gone. So we're starting with your net sales figure minus all of your cost of goods. So again, we're not going into Boots and buying something off the shelf. It's your product costs, obviously, but we do have packing costs, shipping costs, discounts, 3PL fees, transaction fees, return costs. There's loads of these little paper cuts that do need to be factored into the account there. And then we have marketing spend. Notice I haven't simply written ad spend there. I have marketing spend in there. So obviously ad spend is going to be taken into account there. But a lot of businesses that we're working with like to include agency fees. They might put in their email marketing software subscription in there as well. Not everyone does that, but a lot of businesses do. So essentially all of our sales, net sales minus all of those little paper cuts and cost of goods, minus all of our marketing spend, leave us with that contribution margin. And this is essentially profit after marketing spend, but before those kind of bigger operating costs that are going to be similar every single month. Any questions on that one?
Thomas, I have a quick question. When you say marketing spend there, do you see many businesses taking into account their entire marketing function there? So taking in everything, including marketing salaries, if applicable?
Yeah.
You do. You see that often being the case. And would you say that it gives you much more realistic if you're taking in every single detail there, net sales, cost of goods, and your entire marketing, department costs, whatever it may be?
Yeah, unfortunately, I'm going to give you the most marketer answer here, and it really depends. Unfortunately, there's no clear-cut right or wrong answer in this. It depends on how you view your business. Like I was speaking to a business owner last week, and they put their agency fees in as an operating cost to run the business. Well, he was saying, if I didn't have an agency, I would have a staff member here, and I wouldn't consider them a marketing cost; they're just staff. Whereas another business, another day, and speaking with their accountant, and they were like, no, we definitely include it in there. It really depends on your business. There's no unfortunate clear-cut answer for it. I have tried to get it. I haven't been able to. I've just got a massive kind of mix of opinions on it. The devil is in the detail, really, but there's no definitive clear-cut answer of whether you should include it or not include it. But I would see a lot of people, mainly including external staff, agencies, obviously ad spend goes in there, and some businesses are putting in, a lot of them are using Klaviyo for their email marketing, so they might be 700 or 800 quid a month, so they might include that as a marketing cost because it is really. So hopefully that answers your question.
Yeah, no, that is helpful. And I suppose just like anything, all businesses are different, and all businesses' profit and loss accounts are different. So
Yeah.
it stands to reason that this would be different for every business as well. But yeah, that makes sense. Thank you. Hopefully, it's helpful to all of our business owners that'll be listening in, and watching back this as well.
Yeah,
Thomas?
definitely just want to pause and ask if anyone has any questions there. Sorry,
Sure.
Joanne, I cut across you there.
No, I was just going to ask a question, and it's something that, we would get asked quite often as well, like around, what percentage of the overall budget should go towards marketing, and do you
Great
have a
question.
recommended percentage for that?
Great question. I get this so much. Again, it depends on a couple of factors. Just as a ballpark, I suppose, maybe to give an
Yeah.
average of what we typically see, 3 to 4x, so anywhere from 33 to 40% is kind of standard at the moment, which might terrify you. But depending on your it depends on like the profit goal of the business, what the aspirations of the business are in the short, medium, and long term, and also the underlying margin infrastructure of the business. Because you might have two businesses that have, let's just say they both end up with 100K at the end of the year. One of them might have ran the whole year with a 50% marketing budget, and the other one may have needed to run with a 20% marketing budget. Depending on the underlying gross margin infrastructure there, the businesses will have a completely different skew in terms of the percentage of the overall revenue that does need to be spent on marketing. So unfortunately, it depends on so many factors other than just what the percentage of spend is, but it is a question I consistently get asked, but it's really hard to give a definitive answer to because just the fluctuation in gross margin in businesses and profit aspirations can fluctuate massively, really.
Yeah, it could depend on what stage they're at their business, whether they're a
Yeah,
startup or established. Yeah. No,
yeah,
okay.
yeah. One point I would make on that kind of question is having it as a really, really small percentage is not always a good thing. If
Yeah.
you're a really profitable business and your marketing as a percentage of sales is tiny, to me, that screams you have a really lost opportunity because you're driving loads of sales with very little spend. Spend is the biggest lever that you will have for your e-commerce business. And if you're doing really, really well and you're generating good profit and you're not spending much on marketing, don't just see it as a cost, see it as an investment that could essentially potentially, 50% increase your profitability as a business as a whole. But again, just making sure that you're looking at the right things. A lot of e-commerce operators can get, terrified. They're speaking with their agency, the agency is consistently telling them we need more money to spend, and they're looking at metrics that like ROAS that doesn't necessarily align with the overarching financial objectives of the business. So just making sure that you're clear on terms of what you're actually measuring and if it aligns with what you're doing. And once you have that in place, it should just make your decision making that bit easier, I suppose.
Thank you.
Great.
Again,
Thomas,
if you're
oh yeah, sorry.
no, continue. Sorry.
Sorry, I was just going to ask a follow-up question. Um, I was just going to ask, does growing your contribution margin necessarily lead to growing your net profit? Or like what is the difference between them? Does one lead to another? If you could clarify that for the audience, I think that would be really beneficial as well.
Yeah, great question. I'm looking at this stuff every day. I forget that I need to kind of explain it sometimes.
Yeah.
Great question. Really good question. Okay, so again, going back to that point, let's imagine we have like a wall here of operating costs to run the business. These are staff costs, rent costs, software costs. Most of the years are going to be pretty similar. Okay.
Hmm.
They're going to be, they're not going to fluctuate too much if the business goes up or down by 20, 30%. What you're trying to maximize is the profit after marketing spend. So let's just say we're here all the time and our contribution margin for the year, let's keep it simple keep it very, very simple. For a year is 100K and the operating costs to run the business are 50K. That means 100K profit after marketing spend minus the operating cost of 50. We're going to have 50K of net profit at the end of the year. Now, let's just say we go back to the 100K piece. If we feel that we can raise that contribution margin, and let's just say we can get it up to 150K, okay? So
Hmm.
now that wall has gone up, but the operating costs to run the business, they're still at the 50K mark. So we've now generated 150K in profit after marketing spend. The operating costs to run the business, they're fairly similar. They might go up a small bit, but they're not going to rise in tandem with what you've done unless you've moved to a completely new location and taken on way more staff. But by and large, you can increase the revenue and sales of the business without necessarily increasing the cost directly in tandem with that. If you can get to that position, now you've 150 in contribution margin, profit after marketing spend. Your operating costs are still 50. Now your net margin is 100K, and it was previously 50. So just to kind of point out those two differences, your contribution margin could rise and likely will rise at a faster rate than you will need to raise your operating costs, your staff costs, your rent costs. Your light and heat are going to be the same. The electricity to run the business is probably going to be the same. A lot of costs are going to be fixed unless the business completely explodes altogether, in which case they will rise. But if you've gotten to that point, your profit after marketing spend has likely gone up tremendously as a result as well.
And Thomas, for that, are you making an assumption that all of the costs of, I suppose, let's say, fulfillment center, or like, that shipping and postage and packaging of the products and everything all sit within that sort of marketing spend for this purpose, particularly looking at contribution margin, because obviously they would flex based on how much you sell, essentially, but that's where you take into the account the cost of goods. Yeah.
Yeah, so they're being put into the cost of goods. So we're putting in
Right.
product packing, shipping, fulfillment fees, so that they will all scale up as the revenue grows. But again, they should be being captured in that kind of COGS line, really.
Okay, so it's really separating out your cost of sales into those fixed line operating costs that no matter what, as soon as you open the door, they are your costs,
Yeah,
and then the cost of actually the sale of your goods. So hopefully that's been helpful to everyone as well.
yeah.
Thank you, Thomas.
No problem at all. Yeah, so some businesses get this. They have a unified view of their sales and marketing. They understand the cost of advertising into their variable cost, to your point. They are profitable on first purchase or soon after. Um, there's probably 3 hours I can do in that piece alone, but for this piece, I'll kind of jump over it. Maybe you want to be profitable on first purchase, maybe you want to push that out a little bit, but again, it's a meaty one on its own. They drive a lot of high margin orders from their repeat customers over time, and they have good underlying and good understanding of the core unit economics of their business. They know what it takes each month to hit X, to hit Y, in order to hit the profit goals, not just the sales goal that they set themselves. To
Mm.
your point, just on the right here, others don't. There has been this kind of fantasy, I think, in the industry for maybe the last couple of years, where we can simply just chase revenue and top line revenue will take care of bottom line revenue. That's not the case. You have this increased Facebook tax that we're all facing every day of the week, and if you're simply just trying to maximize revenue every day, it may, and in a lot of cases does, come at the behest and the expense of the profit that probably the business was set up to achieve in the first place. So that's one other piece I probably would jump on as well. Just double down on that piece. Don't simply set your revenue targets. Let's just take September for an example. We're
Mm.
on the 19th of September. If we're trying to hit 100K for the month, and we're at the 19th now, let's just say we're only at 50K, just as an example. If you were simply just trying to hit a revenue target and I was running your business and I was being KPI'd on the revenue target for the month, and I kind of have free reign to, make that number happen. What am I going to do? I'm probably going to put on everything on a 20% discount. I'm going to pump up the Facebook ad spend. And you know what? I'll probably hit your number for you. The
Yeah.
problem is I probably spent way more money on marketing than we should have. And I probably eroded a lot of the margin. And on top of that, a lot of the brand equity that you've probably built up as well. If we're consistently going into end of month 20% off sales, you're essentially training your customer to hit that.
Yeah.
They're going to wait until you're on sale if you're kind of continuously going on that cycle. So set your profit targets in tandem with your revenue targets. And yeah, just don't simply be setting revenue targets, because it will lead to, I suppose, misaligned incentives for people who are actually running the business on your behalf, to achieve what you've kind of set out.
That insight alone, Thomas, is like gold to e-commerce companies that will be tuning in. Because if you think of even some of the really successful online businesses that are solely online, still do payday discounts and do those month end offers. And as you say, it's just chasing themselves to the bottom, really, because there's that you're just training all of your customers to hit you at that period of time, and you're not maximizing on the traffic that would be coming to you or repeat custom that would be coming anyway. So it's so interesting, honestly. As I say, we could discuss this all day, because you can see this happening day in, day out.
Yeah,
And as you say, we're seeing more and more e-commerce businesses fail now
yeah.
than ever before as well. So yeah,
And again, like, I'm not trying to come on and say never discount your products. There's a time and a
of
place for it.
course.
We all know that.
Mm.
The problem is when it's just reactionary at the end of the month. Okay, we're panicking. We're going on sale. Why are we
Yeah.
going on sale? Because we need to hit our numbers. And then the number we hit probably resulted in less profitability. And again, we're training the customer to get into that kind of endless loop of just, holding out for that discount, which I have a couple of brands that I hold out for the discount because I always know it's coming and it
Yeah,
always comes, and therefore I'm never going to buy it full price. I'm sure you
that's
guys
it.
do too.
The same. Just as you were saying it, I was thinking, oh my goodness, every month you get that email about, yeah, around that payday period, they'll put out an email, and you just think, yeah, that's exactly it. They're just training us to wait for then.
That's really hard as a brand to get out of.
I bet.
Really hard. We have a couple of brands that are trying to like get out of that for the last year, and
Right.
it's almost a piece of humble pie that you have to eat for the first couple of months because it's not that your customers don't like you, they love you. Like they wouldn't be buying it even at a discounted price if they didn't really like your product and
Mm.
your brand. It's just that you've trained them for such a long time now to consistently wait. And that takes a long time to kind of go
Train
back to
people out
full
of.
price. So once it's easy to get into it, it's hard to
Mm.
get out of it. So just to kind of maybe double down on that one a little bit.
Yeah.
And yeah, just to kind of touch on that, that's a lot of what we're trying to do with brands is like just bring in what products, what orders, what campaigns are not just driving revenue for the business, but are actually profitable. Again, so we're hooking into all of the kind of core pieces there. So this is the main dashboard that you'll be logging in to see. So, your total reach across all of your platforms, how does that translate into visitors on the website? Orders from your e-commerce platforms, all of your sales, and your kind of net profit piece there as well. From there, we have like every morning, every week, and every month, you get a sales report almost delivered to your inbox. So essentially, you can pin any of the main metrics here to the email. So, for instance, this morning you would have got an email with the P&L for yesterday, along with maybe I decided I want to see my email marketing revenue, my conversion rate from Shopify, and the total number of total number of orders I got from Shopify as a whole. So you can really start to customize what you have on that email. And again, you're most importantly seeing where you are versus your goals, your sales goal, your budget goal for your ad spend, and obviously you have your net profit figures. We actually have a lot of users who seldom log into the platform, but they get that email every morning and it's their sense check or their to-do list in terms of what they need to actually look at every day. Because anyone listening that's running an e-commerce brand probably has 15 different tabs open in front of them right now, trying to operate the same business. And
Mhm.
that takes an awful lot of time to keep on top of that, dive into all of those different platforms every day and really try and make sense of the data. So with Store Hero, again, we're plugging into all of those different platforms and giving it to you in one place and a kind of consolidated summary report with the key focus on profitability every morning.
And
Um,
Thomas, just to ask, because the platform looks great and everything, but if I'm
yeah,
a small e-commerce business just starting out, at what point should I be engaging with you guys so that I'm making the right decisions right from the start? Just touching on that point that you said of that, those marketing campaigns that you can get into and that they're very hard to get out of. What stage should a company be engaging with you? Should they be at a certain point of sales, and really well established within their e-commerce brand?
if you were to ask me that question 6 months ago, I probably would have said about 100K, but we've
Okay.
actually started working with a couple of brands actually before they've launched.
Wow.
And why would anyone use an analytics platform when they can't have anything to analyze? But
Mm.
we're kind of working with them to just make sense of the numbers and what they should be looking to achieve. And like some of these brands are going for funding rounds. They're looking to kind of, get external investment. They're trying to speak to different people who might be putting money into the business, and they're
Yeah.
trying to make accurate projections in terms of what's working. They're kind of edge cases, but we are speaking with a lot of brands who day one just need this level of information. Again, you're the cost of capital has obviously gone up quite substantially as well in the last couple of years as well. So the free money that was around a couple of years ago isn't there. So a lot
Mhm.
of brands are really plugging this in from day one and just making sure that they're making sound financial decisions on a daily basis. If you're new to e-commerce and you're new to digital marketing, it will be very easy for you to lose a lot of money very, very quickly if you're not familiar with the lingo, the language, and how it all knits together. So a lot
Mm.
of these people are kind of, getting a sense check in terms of actual hard numbers every day, and it's just kind of preventing them from maybe losing those losing money, I suppose, at the end of the day. They're just looking to understand if it's profitable instead of waiting to get their accounts whenever they come in, and seeing it, whereas they're getting this on a daily basis, and they're just, again, the main lever that they're pulling that is costing them the money is likely their marketing spend. That's what they want to understand every day. Was the extra 100 quid on Facebook yesterday worth it, or did I just throw it into the wind, or whatever you want to call it?
Yeah, that's it. Exactly. And I suppose for e-commerce businesses, what's most important for them is cash flow, without cash flow, it could cripple their business. And ultimately, if you reverse engineer it, what solution is providing them is with an element of protecting that cash flow, isn't it? Because they're protecting the profitability. So yeah, it's huge for them. So it's really helpful to know that even early stage businesses that maybe have a niche product and that are going to be launching and that want to know that they're doing it right from the start, but that ultimately that there's a benchmark there as well that people can be working towards for working with you.
Definitely, definitely. And I mean, it's really, really easy to get set up. We typically can get brands set up. There's a one-click install for everything above here.
Wow.
And then we just pop in shipping and transaction fees. We typically have brands. There's a lot of data in there that I've just ran through. But you're usually up and running in probably 15 to 20 minutes. And we do pretty deep onboarding calls with everybody just to make sure that they, understand what's going on. There's a lot of numbers there. A lot of people can potentially be overwhelmed by it initially. So we just want to make sure that anybody who's using the platform is talking to us regularly for the first while and actually, understands how to navigate it and make decisions based on the back of it as well.
Yeah. Great. Yeah.
Um,
The platform looks fantastic.
yeah, no, there's a lot of work gone into it now at this stage, but it's coming together nicely, thankfully. There's kind of a unified dashboard, a store overview, almost like your operator's cockpit. We have a full P&L view of every order, of every product, an actual P&L view, your email reports, your kind of creative overview for all of your meta ads, insights, and recommendations. Again, this is not a replacement for Xero or QuickBooks that will still need to live internally. This is not multi-management accounts or anything that can be done, but the P&L in here is showing you your finances along with your marketing, so your acquisition, your retention, and general e-commerce and order metrics in the one line, and just showing you kind of how increases or decreases in certain numbers resulted in, I suppose, other positive or negative improvements in the business as a whole. Why Store Hero was different. So kind of very profit first. So again, we're not focused as much on simply revenue. We are trying to grow your profitability. Very, very easy onboarding, and it's built for e-commerce operators or store owners as well. This is one business that we worked with here in Ireland, Walker and Hunt. So yeah, to your point, I suppose, like how are people making the decisions? Like Luke would have told us that, prior to Store Hero, he realized that he lacked the confidence and the clarity to scale the business profitably. Main issue there, I suppose, was ad spend. That the rising cost of ads is a challenge for all businesses. I'm sure everybody listening here would probably agree. Since onboarding with us, I think it was nearly a year ago at this point, he now makes every decision with margin in mind, and it's been an absolute game changer. Sales increased by 25%, but the increase in net profit was almost doubling the business in the first year, which is class, and saved him over 8 hours a week. So really, really positive case study there that I had to include.
I mean, there's no doubt that you had to include that, Thomas. The numbers speak for themselves there. An excellent case study and just absolutely fantastic to see. I've no doubt, having seen and discussed all of your insights already, that those results are absolutely true, because I can really see how you would be able to shift the frame of mind of those sort of, the people that start e-commerce brands do them as passion projects, don't they?
Yeah,
They don't do them ever with a view of profitability in mind or considering that, and so you're having to sort of step in there and shift their thinking. But the saving time for them as well must be huge. If he's saving, I think it was 8 hours per day, you said, that's
per
time
week. Yeah,
back per week. Yeah,
yeah,
sorry.
yeah.
So yeah, of course. But that's huge, because that's time that he gets to dedicate to, whether it's a healthier work-life balance now or back into growing and scaling the business, which is ultimately why they started it in the first place.
Yeah,
Takes them away from running spreadsheets or managing anything. That the proof's in the pudding there. Thank you so much, Thomas. That's been just so insightful today, and I've no doubt that it'll be a huge benefit to everyone that's watching live and that will be watching the recording after. So thank you.
Yeah, thank you everyone for joining today's webinar. And thank you. I don't know if we've lost Thomas now,
Oh
but
no,
I'm
he's
thank
here.
you.
still there.
Oh, you're still there. And thank you, Thomas, for sharing all your insightful knowledge. I've definitely had lots of key learnings from there. So we will send a recording to all of the attendees after the live event, and we'll also share Thomas's details. And if you have any other questions, follow-up questions, do let us know. So thanks everyone, and hope you have a great day.
Thanks, guys.
Thanks so
Thank you.
much. Yeah.
Bye-bye.
Bye bye. Enjoy the rest of the conference.
Thanks.